Welcome to This Week in Impact, where ImpactAlpha editor David Bank and I break down some of the most interesting impact investing stories of the week. I'm Brian Walsh. It's Thursday, June 27th. David's on a much-needed vacation this week, and so I'm joined once again by ImpactAlpha's senior editor of Deal Flow and Emerging Markets, Jessica Pothering. This week we'll cover how Mexico City impact fund manager New Ventures is aiming to scale not by going big, but rather by going deep. How Baltimore-based Obran is attempting to build the first worker-owned cooperative conglomerate, and why Cerna Foundation CEO Don Chen thinks impact funds led by women and people of color aren't high risk, but rather tremendous investment opportunities. That's all coming up on This Week in Impact. Hi, Jessica. Welcome back to the podcast.
Hi, Brian. It's great to be back, as always.
Now, Jessica, the question of scale is a perennial question that comes up in impact investing, and it's been one that we've been focused on in our editorial calls in recent weeks. Let's start with how a fund manager thinks about going to scale. Now, the traditional script is that a fund manager raises an initial fund, and then in their subsequent funds, they grow their assets under management so they have higher potential profits to generate from there. But you've were particularly focused on a fund manager based out of Mexico City that is kind of flipping the script on that. So tell us a little bit about New Ventures and how they're trying to go to scale.
Sure. And I should say, I think the whole ImpactAlpha team knows New Ventures very well. This wasn't my story. This was my colleague, Dennis Price, who this week did an interview with New Ventures founder, Rodrigo Villar. And just for the audience sake, New Ventures, they're a fund manager based in Mexico City, and they're also this longstanding impact ecosystem builder. And yeah, to your point, Brian, one of the reasons I really loved this interview is because Rodrigo really flipped the script on scale. And he said, as we scale, we believe we need to go deeper into the problems. We're working more at getting deep into some industries. And, as you know, since the early days of impact investing, the whole conversation has really been about how to reach scale. And I don't think the New Ventures team would necessarily dispute that, but they have just a different take on how to do that, that it's not necessarily, as you said, about raising ever bigger funds and proving the same strategy, but more about proving a strategy and then finding where the impact finance needs to go next. So it's scale in terms of moving impact money into new places rather than raising more and more money and having ever greater assets under management.
Can you tell us a little bit about the funds that they have managed in the past and some of their new ones and why they're different?
Yeah, so one of their early models was this fund called Adobe Capital. And what Adobe did was providing revenue-based finance. That's sort of an alternative financing structure that's not equity and not quite debt either. And that was pretty innovative in Mexico when Adobe Capital launched. And so they raised a fund around that, supported a number of businesses, and then did exactly what you alluded to before. They went back and they raised a second fund. And after the second fund, they decided, okay, we're going to try some other new things. So they sold Adobe Capital off to Deepkin Impact in 2021, which is based in Canada. And now they're trying this more niche targeted kind of sector specific model. They've got a fund called Viwala. It's a small business finance fund that focuses on underrepresented entrepreneurs, women, but, also transgender business owners, which is pretty unique in Mexico for an investment lens. And then last year, I think they launched, they launched another fund called Empodera Fund, which is dedicated to women's healthcare solutions, which is enormously underfunded. So yeah, and I think that's kind of the pattern of entrepreneurs and innovators, right? Like you start something, you build it, and then you find the next thing to start and build. So that's what they're doing.
Now, I know in the interview, he did say some things that raised some eyebrows among those in the impact investing space. Can you tell us about how he characterized the impact industry?
Yeah, if you read all the way to the bottom of the piece, and you're a longstanding impact investing champion, which I think anybody listening to this podcast probably is, you might have felt your stomach drop because he said, impact investing is a perception, it's an ideology. And then he questioned whether or not it could penetrate mainstream financial markets. But that said, he's been doing this work for decades, and he continually chooses new spaces to try it, right? So I think he's not refuting the need for impact investing. He just is sort of challenging the sort of conventional model of ever bigger and ever more money in proven strategies is the way to do that. What they're arguing for is moving ever further along the spectrum into more niche opportunities, and saying that is more impactful than being a generalist. He's not arguing against scale. He's just saying that you can do it in different ways, and having a lot of people doing niche things is just another form of scale.
All right. Well, that's quite interesting. Let's leave it there and take a quick break, Jessica. When we come back, how Baltimore-based Obran is attempting to build the first ever worker-owned cooperative conglomerate.
I'm Eric Carmen Gonzalez, ImpactAlpha's Director of Subscription Growth. Ever feel like there's so much happening it's hard to keep up? We hear you. That's why we created ImpactAlpha Latin America, a monthly newsletter for impact investors who want to keep their eye on trends and investments happening in Latin America and the Caribbean. Follow the money and connect with agents of impact powering Latin America's impact economy. Visit our Instagram page @ImpactAlpha and click on the link in our bio to sign up.
All right, so continuing on the theme of scale and going to scale, tell us about Obran and what they're trying to do.
Obran was a cool story. This is reported by my colleague Rudy Sonatis this week. They're a business based in Baltimore, and the crux of the story was that they just secured a new investment from Acumen America to build up this new model that they're trying for advancing worker ownership in local businesses all over the U.S. And so Obran, what they do is they're set up as a cooperative themselves. Cooperatives are these member-owned structures. And so they, as a cooperative, buy up small businesses all over the U.S., and they transition them to employee ownership by bringing them into Obran's cooperative structure, right? So they make them effectively subsidiaries. And then after 60 days from that transition, employees of those, now subsidiary businesses can become a member of Obran and share in Obran's profits.
So it's interesting that it sounds like they're trying to be a holding company for these worker-owned cooperatives.
Yeah, that's exactly what they're doing. They call themselves a cooperative conglomerate corporation, and they sort of differentiate themselves from other cooperative models, which are effectively like federations, but of these sort of individually owned cooperatives, rather than this owner-operator model like the holding company model that you just described.
And the Acumen investment, it wasn't an equity investment because its an ownership structure is already there as a worker ownership, but it was a debt investment.
Yeah, that's right. So they structured the investment to make sure that it aligned with Obran's ownership model.
So I find this model super interesting because it's a way of getting to scale with the worker cooperative business, but it's hard when the worker cooperative businesses tend to be small and mid-sized companies themselves. And what Obran is doing is saying, well, we're going to not just federate a whole bunch of small and mid-sized companies, but we're going to create a conglomerate, a holding company that brings them all together. And that way you get economies of scale, but still with that worker ownership structure in place.
Yeah. And I mean, it's funny because Obran just one example, but these sort of stories about driving investment at scale in very localized ways has been coming up all over my own reporting recently. Last week, I wrote about Raven Group. They're an Indigenous-owned investment fund in Canada that invests in Indigenous-owned businesses and community-led initiatives in the U.S. and Canada. And they've just raised $20 million for their new fund, which directs capital to locally led projects on sort of an outcomes-based financing method. And for anybody who, was around for the early days of social impact bonds, that was one form of outcomes-based finance. And, they know that can be, those models, earlier models could be very hard, very cumbersome, difficult to structure because there's just so many different stakeholders involved. And Raven's take on that is, an effective intermediary and fund manager can really reduce a lot of those pain points and usher capital to places it otherwise wouldn't go, and do it in a way that is suitable for an individual community's needs.
So it's how to get these structures and funds and outcomes-based work fit for purpose and fit for specific instances of the outcomes that they're trying to address.
Right. And just to provide an effective channel of capital so that investors aren't having to hunt around in a lot of different localities and do all of that diligence themselves.
So it's bringing efficiencies on all sides of the equation, helping investors get access to the deals that make sense for them, and helping those investments get access to the capital they need to grow and scale.
Right. And I think, if you think about a lot of the work that has to be done, in the climate transition, correcting historical, racial and other social inequalities, a lot of it really has to be done in a very place-based way. There's another example from this week of the social enterprise accelerator called Nest that's based in Peru. And they provide financial and business support to mostly indigenous-owned agricultural cooperatives in the Amazon basin. And they published a report last week about how to get more capital into the Amazon's bioeconomy and the indigenous communities that subsist off of it. And their argument was, or one of the number of levers that they mentioned that is most effective for doing that, is working through intermediaries and fund managers that have deep local knowledge and connections on the ground.
How does having those connections help them improve the performance of their investments?
It's more a matter of ensuring that capital efficiently and appropriately gets to the places that it needs to go. And having that deep local knowledge is really a key to ensuring that the investments succeed not only in achieving their impact objectives, but also that they are delivered in a way that is actually going to generate a return on your investment, right? Because they're fit for purpose.
All right, let's take one final quick break. And when we come back, why the Sturdna Foundation's high-risk, high-reward impact investments are paying off.
Every day, ImpactAlpha uncovers stories that make a difference to impact investors. I am Zlaima Bibo, Chief Operating Officer at ImpactAlpha, here with a special reminder. Subscribers get the award-winning brief 5 days a week and so much more. Unlock exclusive coverage, get access to subscriber-only calls and Slack channels, plus search hundreds of jobs and internships at the ImpactAlpha Career Hub. What are you waiting for? Subscribe today. Learn more at impactalpha.com/subscribe.
All right, Jessica, for our final story, let's talk about that really interesting interview that Don Chen gave to our own colleague, Dennis Price. Now, Don is the CEO of the Sturdna Foundation, has been since 2018, and they've taken a really interesting approach to impact investing. Can you tell us a little bit about what you discovered through that interview?
Don Chen is the third foundation president that we've spoken to in recent months to discuss the foundation's commitment to deliberately targeting its investment strategy to redress systemic racism. The other two, we've had an interview with John Palfrey of the MacArthur Foundation and Tanya Allen of the McKnight Foundation. And what's significant about this is that these foundation presidents are speaking out in the face of this movement of politically motivated attacks on diversity, equity, and inclusion in the U.S. by members of the Republican Party.
Let's take a step back to talk about the Sturdna Foundation's approach to impact investing. And I know that they carved out $100 million from their endowment for impact investment several years ago. That was roughly split 80-20 between MRIs and PRIs. First of all, Jessica, can we just help our audience understand what a difference is between an MRI or mission-related investment and a PRI is a program-related investment?
Yes. So these are two tools that philanthropic organizations have for making investments. Program-related investments they're technically philanthropic investments that prioritize impact outcomes first and foremost, compared to mission-related investments, they're also impact focused, but they also have a focus on financial return.
And a rough rule of thumb, as foundations have legally mandated to pay out 5% every year from their endowment, that 5% payout is in the form of grants, and a PRI can come from the 5%, whereas the MRI essentially comes from the principal, from the corpus, from the endowment itself.
Yes, that's right. And so Cerna Foundation, they started with this $100 million carve out that you mentioned, and they've since grown their impact investing portfolio to $170 million. As Don Chen said in the interview, that part of their portfolio has actually outperformed the foundation's broader investment portfolio over the past 5 years.
Yeah, that really stood out to me. The fact that, the outperformance of their mission-related investments compared to their traditional endowment investments that didn't take that approach, really kind of puts to rest the notion that you have to have some kind of trade-off or concessionary approach when it comes to your mission-related investments. That this kind of shows that, at least in this instance, it was Cerna Foundation was able to outperform their standard non-mission related investments in their endowment portfolio.
Yes, that's right. And they're doing that with this very deliberate racial lens investment strategy that is under attack at the moment.
Yeah, it's really fascinating. It sounds like, they were explicitly trying to go for a high risk, high return investment, but really it was more about a high perception of risk than actual risk.
Well, this is a conversation I have so much. I think, Black entrepreneurs and asset managers, but, also women and other people of color, they've been historically and systemically excluded from the financial system. And because they manage so little money, they're perceived as risky, right? So, but what the Cerna Foundation is doing is, to prove that actually, no, there, as, Don Chen calls tremendous opportunities. They have this sort of graduation approach with their portfolio. So Cerna might start with an organization or a fund manager making a program-related investment, and then in subsequent funding rounds, they would apply or offer a mission-related investment instead.
And that kind of elevates it from a charitable purpose or charitable intent to one that can achieve those impact objectives alongside, market rate commercial returns.
Yes, and that's one example from their portfolio is Impact America Fund. Impact America Fund. That's it was a fund founded by a Black woman named Keisha Cash, who we've profiled before as an agent of impact. And when she launched the fund in 2014, Cerna contributed with a PRI, and then last year, when Impact America Fund started raising its third fund, Cerna invested with an MRI.
That's quite the graduation story.
Yeah. And, it's just one example, of course, from their portfolio. But, as Don Chen says, the foundation, from these results, it's going full steam ahead on impact investing.
Full steam ahead indeed. All right. I think that's a good place to end it this week. That's going to do it for This Week in Impact. Thank you so much, Jessica.
Thanks so much, Brian. It was fun.
And thank you all for listening. If you liked what you heard, please subscribe to the podcast wherever you listen and share this with a friend or colleague. If you want to help us out, be sure to rate us and give us a review on Apple Podcasts. Believe it or not, it really helps other people find the show. If you want to give us feedback, send us an email at podcast@impactalpha.com. We would love to hear from you. This Week in Impact is a production of ImpactAlpha and part of the ImpactAlpha podcast network. For more exclusive stories about the world of impact investing and sustainable finance, join other agents of impact like yourself by subscribing. Just go to impactalpha.com/subscribe for full access. Thanks, as always, to our producer extraordinaire, Isaac Silk. For Jessica Pothering, I'm Brian Walsh, and we'll see you next week for more Impact.